Hello and welcome to my new show, The Buck Stops Here. I'm Catherine Murray, and I'm very excited to be joining the News Forum, where all voices matter. After a very exciting career on Wall Street at Goldman Sachs as well as Deutsche Bank and 10 years as a senior anchor, it is an absolute dream to be launching a weekly program focused on in-depth discussions on matters that impact Canadian businesses, the markets, and your money. And when I say Canadian businesses, I certainly do mean both large and small. I did start a small women-owned brokerage firm in the United States, and I certainly know the stress of getting it up and running, getting the sales, and enough sales to generate a profit. The government policies affect your prosperity and opportunity set, so my program will focus on the intersection of both and what that might mean for you and your family. With that said, let's get some perspective on the markets right now. Please welcome a former friend, current friend, and somebody who I've interviewed for so many years, Sadiq Adatia. He is currently the CIO, Chief Investment Strategist over at BMO, with about $950 billion of assets under management. Sadiq, great to see you again and to be able to get caught up with you. Thank you so much for joining me.
Oh, thank you very much for having me. Looking forward to it.
Thank you. And Sadiq, I should remind our viewers, you have been right so many times on the markets. Really, I think you've had a great track record, and I know you're at a new firm, but I know you to have a great feel for what's going on. So why don't you start with what you see going on in the marketplace right now? Of course, inflation and debts deficit is front and center for so many people, but how do you see the world?
Yeah, if we look at inflation, I would say right off the bat, inflation looks to us as being a bit more transitory. Now, that could mean a lot of things, but for us, that looks like somewhere around 6 to 12 months of higher inflation than expected. There'll be components of inflation that I think will actually, start to decline, but there'll be other areas of inflation that will continue to pop up. Wages is a good example of that. Overall, the market seems to be taking this in stride. We saw that in the latest inflation numbers. Markets are really anticipating a really promising future ahead. That means that they're expecting a reopening that goes pretty seamlessly, earnings that continue to go strong and move up in the right direction, jobs that continue to be created. And for the most part, a very, I would say, optimistic Fed. And what I mean by that is a Fed that is still continuing to be, relaxed on policy, relax on terms of pushing too far ahead on talks of interest rates, and therefore we've seen markets generally go much higher over the past year. That being said, I think we're at a point now where markets are starting to get a little bit more nervous about tapering, wondering what might happen with future earnings, and of course the variant that seems to be in the news at the moment. So you're starting to see a bit more volatility in the markets. And I would not be surprised to see markets taking a breather here.
I hear you, and I think that that's exactly what we're seeing. It's interesting, though, because you're essentially saying that the market seems to believe that the Fed will, in fact, have this under control, and that's always the big question mark. We see historically the Fed make many mistakes, and we certainly had a taper tantrum in 2018. Do you think that the Fed will get it right? And do you think that the market consensus is right in thinking the Fed is going to get it right?
Yeah, that's always the $1 million question. I think the Fed has done a pretty good job of highlighting, when they're thinking about talking about tapering. And, they are watching the economic data carefully. And nothing to me has stood out that should cause them to really change that time frame. Now, the market may, jump on news every so often and think things might move a little bit faster. The only worry I have on the Fed is that the Fed governors, have all come out and said different things, and that has confused markets a little bit. So we saw in the past couple of days, markets have reacted a little bit more negative to, the markets. And I think when you think through, in the coming months, there's going to be opportune times for the Fed to continue to give guidance. If it continues to be not exactly clear, and I think the markets are going to get nervous with that. If the Fed continues to be, talking about this time frame as the same way it's talked about it 2 or 3 months ago, then the markets are going to start to more and more believe in what the Fed is saying. And I think the Fed is not trying to surprise anybody. I think if they're going to move a little bit faster, they're going to try to add more clarity there. And I think that's the good news. I think that the markets will maybe at one point in time take it as a bit of a shock if it's change of course. But I don't think it'll be long lasting. And I think the Fed is really going to try to be a lot slower in moving on tapering and, of course, eventually on interest rates.
We're going to take a quick break, Sadiq, but when we come back, I'm going to get your take on the BOC because we certainly had the highest inflation reading in Canada over the past 10 years just the other day, and that's going to be key in terms of the BOC's next move. We'll be right back. And we are back with Sadiq Adatia, CIO of BMO Asset Management. Sadiq, I want to just pick it up in terms of central banks once again. We talked about the Fed. I think your view is that the Fed will, in fact, get it right. They don't want to surprise the markets. But let's talk a little bit about the Bank of Canada, because the inflation numbers that were just recently out were probably a little bit more shocking to most people, higher than expected, the highest numbers we've seen in 10 years. Do you think that the BOC is going to be forced to taper or raise rates sooner than the United States and sooner than they perhaps have been indicating?
Yeah, I actually do think that the Bank of Canada will move faster. And the reason I say that is, as you mentioned, the inflation numbers were hot. The job picture is actually better in Canada than the United States. We've got more jobs recreated after the pandemic than what the U.S. has. And I think generally the Canadian economy has actually held up relatively well. So I do think that the market is anticipating that the Bank of Canada will go faster than the Fed. How much faster, I don't know quite yet. But I don't think the Bank of Canada wants to go too far ahead of the Fed either. So I do think that we're going to continue to see some upside in maybe the Canadian dollar as a result of that. But after the tapering, has started in the United States.
Okay. Well, interestingly as well, though, the Canadian dollar actually did decline when we heard of the election being called. Now, at the same time, to be fair, WTI was also declining. But I want to get your take in terms of how you've been viewing the federal policies over the past number of years, what you think investors, viewers need to be considering as they go to vote.
Yeah, it's a difficult one because we've had a pandemic, right? So all the stuff that's gone on in the past year, you kind of throw it out the door. But what I would say is that Canadians are quite happy at the moment with the Liberal government. And you can see that by the recent poll numbers. And they wouldn't have called an election if they didn't think they were going to get more votes coming through as well. But if you think through, we've seen the equity markets do really well. We've seen jobs come back faster here than the United States. Though we were criticized for the vaccine now rollout has been much better than most parts of the world. So that's given optimism to a lot of Canadians. And also that if the variant does start to continue to grow, our chances of a lockdown are a lot lower now than they would be compared to the United States, given how much vaccine rollout has already occurred, how many people have had double vaccines. So when you think about the election, whether it be a majority or a minority, to me, I don't think it really is going to matter too much. I think the market will just embrace the fact that the Trudeau government will continue to be in power, happy with that. And because the pandemic is still not over, they want to see consistency there. So I just see that continuing on. And again, as I mentioned, I do think the Canadian dollar will appreciate because that generally means that the policies in place are going to continue on. And when we talked about the interest rates, that will probably continue on. People will continue to expect that to go ahead of the Fed.
But, when you think about some of the policies that have been put in place, I mean, one could easily argue that if we had more business-friendly policies, that we'd be much further ahead. I mean, you just take a look at the energy sector, still producing 4 million barrels a day, which is what we were when Trudeau came into power. And really, we gave that energy file to dissident nations. That's money that could be in the coffers of Canada.
Yeah, I think when it comes to the energy sector, I think there's a lot to be learned there for sure. And I think that's probably one of the areas that you could criticize the Liberal government for. But at the same time, think about where oil prices are at today. We're not sitting at $30 a barrel, right? We're sitting at much higher levels. So the energy companies at the moment are still quite happy with what they're seeing. And they are investing back in growth as well. So, at a time when you want to be wrong on the energy policies, this is probably the time because oil prices are at a better spot than they would have been. But there's no doubt if we didn't have this recovery we're happening in the markets today and the economy at the moment, that this would be much forefront in the policy news and what the Liberal government would be criticized a bit more for.
And when you talk about jobs, perhaps better here than in the United States, I mean, it's apples and oranges essentially. But what kind of quality jobs, and are they high-paying jobs? I think that's what people have to also be cognizant of.
Yeah, it's kind of a bit of a mixed picture here. I do think that we're still getting pretty decent jobs being created. If you go back, 10 years ago, the jobs that were created in Canada were all in the energy sector, as we were just talking about. Those were high quality, high paying jobs. Today, they're probably not to the same extent, but we are seeing jobs being created in the AI world, artificial intelligence, and that's also high paying jobs as well. So we're seeing a bit of transformation here. I wouldn't say it's comparable one to one there from energy to AI because more energy jobs were created back in a decade ago. But I do think that we're moving in the right direction. And in the US, I think what's happening is there is a search for talent as well. And also the fact that you have a lot of individuals who just haven't wanted to go back to work right now, either because of the subsidies that they're getting, or also because schools haven't started and there's stuff to worry about their kids and schooling. I do think a lot will start changing in September.
And we are back with Sadiq Adatia, the CIO, Chief Investment Officer of BMO Asset Management, $950 billion of assets under management. That's a lot to be responsible for, Sadiq. So let me get your take in terms of how you are looking at investing right now from an asset allocation perspective. How tactical do you want to be? What's the view?
Yeah, I do think right now you want to be a bit more tactical in your portfolios. There's no doubt about it. We've had an exceptionally strong run in markets, and we're at a point where, from a valuation perspective, you have to start to wonder whether or not, are we gone too far too fast? That being said, the alternative, which is bonds, really is not attractive either, right? We got exceptionally low yields, but we're probably going to see yields go up at some point over the next couple of years. We are going to start to see, rates go up as well. So I would say right now, what you want to be careful about is not to take too much of an overweight to equities, particularly in this couple of next months, August and September, where history has shown us that those have been a bit more volatile. But I still believe in the longer term that we're going to see markets continue to go higher up from here. There's no reason why earnings can't continue to go stronger up. The environment is still positive. If you think about, even if we start to see tapering occurring, there's still money still going into the system, just at a lower rate. Rates are still relatively low still. And again, we're still seeing a very strong consumer out there that still has pent up savings there and probably dying to get back and spend on the markets spend on the economy. And so I do think that you still want to be bullish, but maybe over the next couple of months, you want to be a little bit more careful.
And I hear you, and I see and feel the same way. I tend to have more of a bullish view right now, but I do think it's going to be a little bit volatile. In particular, because some of the most recent economic data that we've seen has shown some slowing. Now, that might be natural and normal, just given where we were and year-over-year comparisons, et cetera. But some of the leading economic indicators are indicating that we are slowing down, particularly in the United States. So what do you say to that, and where do you even want geographic exposure?
Yeah, so I do think that you are seeing some slower or weakness in the numbers, and I think it's because of the fact that the variant has come back around and people are kind of pausing a little bit. So I'll use the airlines as a good example here. They were starting to look really promising in terms of, the fares going up, but also the number of people on those flights. But we've seen comments that people are canceling their flights for future trips, and that's because of the variant. That's telling us that people are being a little bit more cautious in their spending, cautious in going out. For the reopening is pausing a little bit, and therefore you're seeing these numbers on the economic side not look as strong. So if I think at going forward, where do you want to invest? I think you still want to be in the US. I think that's still a great place to be. I actually still like Canada as well. I think Canada still has a lot of good things going forward. As I mentioned, the job picture looks relatively strong. I do want to be cautious, though, in China, given the regulatory environment right now. There are a lot of great companies with great valuations, but you're unsure now what the earnings are going to look like going forward and how much impact is regulation going to have on that. So that's the part that you have to really question yourselves. And therefore, the PE multiples that were there about a month ago, which were a little higher than they are, a lot higher than they are now, it just didn't make sense. And there's still room for those to potentially go lower from now.
And, this is an important point to pick up on because, I was looking, and own Alibaba, Tencent, what have you. And obviously the valuations are much more attractive today, giving you a potential buying opportunity. But it's hard to believe that the China government wouldn't want to support those companies. They are their biggest bellwethers. So I'm kind of interested or surprised that you're sitting on the sidelines a little bit.
Well, yeah, we're sitting on the sidelines for now, is what I would say. We have had very frequent conversations on this, and I do think that we're going to look at an opportunity at some point in time, but I don't think right now is still the time. And the reason I say that is, you continue to see on a daily basis China coming out with comments on regulation, stringent measures coming through, and I don't think you've seen enough investors out there react to that quite yet. You've seen some, obviously, because you've seen stock prices go down, but I still think there's more left or still. And I think as we start to see maybe call it another 10% decline coming across some of these names, I think then it starts to be a little bit more attractive to start to nibble at some of these names or these areas or sectors. But I don't think right now is quite the time yet.
Okay. And what about big tech in the United States? It's kind of been languishing here a little bit for the past 5, 6 months.
Yeah, I think you have to think about technology from a much longer perspective. I think technology is obviously a place you need to be in for the long term, and technology touches every sector of the economy, right? So, whether that's consumer discretionary or staples, even how they do things, or social media, it doesn't matter what technology touches it, and everybody's looking to find ways, rather than bring back all those bodies that they lost during the pandemic, to find technological ways of doing that in a much better way.
All right, we are back with Sadiq Adatia, the Chief Investment Officer of BMO Asset Management. I'm going to correct myself, about $400 billion in assets under management. Thank you for that, Sadiq. And let's just take a little look here as well. We've talked about the United States, China, in terms of where you'd invest. What about Canada specifically? Because you have said that you are favorable towards Canada. So where in particular?
Well, I do like the energy sector. And again, as I mentioned, it's been one of those things that hasn't done well over the last few years, but it has obviously done much better more recently. And I still think that as the reopening does occur, and again, I believe it's just pause at the moment, we're going to see demand for oil prices. We are seeing not necessarily an excess supply, but adequate supply at the moment. As that demand moves forward, we will probably have not enough supply. So I do think oil prices remain relatively strong. I think energy companies are going to capture some of that profits a lot better than they have historically. And as I mentioned, I do see continuation of growth investments done by these energy companies. So I do see that as a good area. I think the financials are an excellent place to be. Strong, yields, strong balance sheets, and they still haven't had the chance to continue to increase that dividends, like the U.S. has had the ability to do. And I think again, share repurchases as well too. So all of that means to me that we're going to have a pretty healthy economy going forward. And again, those areas are going to continue to drive the markets higher.
And what about the valuations of the Canadian banks?
I think they're still relatively cheap. When you think about the wealthy Canadians out there, housing prices have continued to go up. That looks really strong. Equity markets have done well. Again, we mentioned that Canadian balance sheets look relatively good. But when you look all through all of that, I think Canadians, are going to ready to start spending, start to take out loans, start to continue to invest. All those things really bode well for the financial sector. And then you tack in the fact that rates are eventually going to go up, interest rate margins are going to go up from there as well too. So that bodes really well for the financial sector.
And Sadiq, I don't think you and I have really talked much about cryptocurrencies in the past, but I think every investment bank is absolutely looking at it, trying to figure out ways that they might want to provide it to their clients. Where do you stand on crypto these days?
Yeah, I think you definitely have to continue to evaluate cryptocurrencies. I don't think they're going away anytime in the near future. We obviously saw a big pullback not too long ago, and that's kind of par for the course with the currency here. But we've seen it bounce back again from 30,000 to 45,000 on Bitcoin. So I do think it's something you have to continue to keep an eye out for. The question still is on the regulation side, and of course, how other countries are dealing with it. We saw, China obviously not being as favorable to it, but you are going to see continuation of people using balance sheets, with cryptocurrency, and we've seen a couple of evidences of that. You're going to start to see it become part of some of the asset classes going forward as well. So I think you have to keep an eye on it and decide, how you want to utilize it and what it's going to replace. Some have used it to replace gold as an example. Others have just used it more, as I said, on their balance sheet as a replacement for cash, which I don't think is the right way to go because it's way too volatile. But I think you have to find out, do you want to play the currency itself, or do you want to play like Ethereum or any other part of the cryptocurrency platforms? And you've seen things obviously like Robinhood and Coinbase and others. And so you have to decide which way you want to play that. But to me, it's still too early to do that because it's not regulated quite yet. And it has way too many swings coming through at the moment. But I do think if you ask me, do I think cryptocurrency is higher, 12 months from now, my answer probably would be yes.
Okay. And Sadiq, the name of my show, the new show, is The Buck Stops Here. So I want to ask you, what do you think about when I say, what's your buck stops here?
Well, I think the buck stops here really comes down to, what are you going to do with interest rates for markets? And I think that where it comes to this situation, this is where everything is going to be, weighed heavily on. If interest rates go faster than expected, markets are not going to react very positively to that. It's going to cause the markets to really pull back. On the other hand, if everything goes in a smooth fashion with a lot of transparency, I think the markets can go significantly higher from here. So buck stops right at the interest rates.
Okay. Sadiq, we will leave it there. Great to see you. Thank you so much once again for being with me and sharing your views and perspective. I really appreciate it.
Always happy to join you. Thank you very much.
Thank you. We'll see you soon.
Okay.
And that, of course, was Sadiq Adatia. I certainly love following his work. He's been having so many right calls over the past number of years, and maybe it's easy to follow somebody who's right, but I do tend to agree with him. I think that it might be a little bit of a bumpy ride in the markets over the next couple of weeks. Some of the economic data as of late certainly has been slowing. That's weighing on the markets and the momentum in the markets. But at the same time, we've got a lot of tailwinds that are supportive for risk-on assets like the equity markets, such as accommodative central bankers around the world, and also really just the beginning of this economic recovery and reopening trade. Thank you so much for joining me. I hope you enjoyed it, and certainly stay tuned for the next edition of The Buck Stops Here.